Going green, why paint manufacturers are fast evolving into tree huggers. Good evening, many thanks indeed for joining us. This is the Trading Bell. At some point, we shall be looking at how the market has behaved in the last 1 week. And we shall be joined by Faith Mwangi. She's a research analyst at Genghis Capital. And for now, we talk to Rakesh Rao. He is the Chief Executive Officer of Crown Paints. We want basically to find out where the paint industry is going. We know, of course, they are going green, but how are they doing it? Let's now talk to Rakesh. Rakesh, thank you very much for joining us.
Pleasure meeting you.
Nice to meet you too. Please. Well, for a company that has been around for close to 60 years now in the paint manufacturing industry, for the last 6 decades, what have you learned?
The market is growing. The market needs innovations, and we have to keep on innovating ourselves to meet customer expectations. The market has become very competitive and demanding. And the paint industry is not just like selling the paints and just a color on the wall. Now people are expecting the various fashion design products. The paint has become a lifestyle nowadays. So it's very important that we keep on innovating the new products and meet customer expectations. We keep on regenerating the brands. We keep on launching new brands. So overall, paint has been blended well with the innovations and the style in adding your lifestyle in overall industries, in fashion industries, and in construction industries. Qualities, durabilities become very important aspect nowadays. It's not like that any paint you can sell now. People are looking for a brand which can perform very well. People expecting the paint can perform for 7 to 10 years. So those are the things which are happening, and we have to keep on meeting the expectations of the customers. Various new professionals are coming from Europe, America, South Africa, and starting a practice here. Base architects and they are looking for a brand which meet their expectations and the specs. So now the particular specs of the paints has become very, very particular. People are looking for, earlier it was just written a paint, but now it's paint with Teflon, like for example, paint with silicone, then texture finishes, which texture finishes. So, I mean, the categories of the product is going up, and expectations of professionals and the customers going up day by day.
Very well. And so, I mean, how do you manage to meet all these expectations of the people without raising significantly the cost of paint, lest you get yourself out of the market?
Whatever we try to do, cost has always been a factor to determine any innovations. Because once any innovations or requirement comes, we look for what is the price people are going to pay for that. When the price are expected, the market, like we are professional, we have product management department. So we do a lot of research before launching the product. So requisitions comes to from the product department by the sales, then being sourced the raw materials, and then we keep on doing research. What will be cost of raw material? What is cost of lending in the country? Then after the cost works out, then we go to professional. What price you are looking for? If you are giving a higher performance of the product, then what price you are looking for? So he said, yeah, this price is okay, look okay. Then we start looking for that, because many products we can still launch in the country, but this thing is out of budget at the moment. So we don't we have the product ready, but we can't launch because it's still we are looking for something to come and to bring down the price down. And maybe when the affordability factor is always there to launch a new product. If his product is not affordable, there's no point of launching. It's just a waste of time.
Good. And last year we saw your profit going up by about 26% compared to 2015. And how did you manage to post such strong profit in an environment whereby you're having a lot of cheap imports from Asia, and the cost of production, of course, has always been an issue here?
I think we have very strong business strategies and policy to how to improve the profit margins and put a lot of internal controls and cost savings here. So, for example, being a very active R&D departments, we also have given a task The price should not go up. Even a raw material price going up, but look for alternate resources without affecting the quality of brands. We can able to produce better quality products. Overheads is a very key factors to manage the organization overheads. So what we've been trying to do, we have a lot of focus on efficiency, internal efficiencies and productivity. So now we have systems to measure the productivity. Now, people are accountable for everything. It's not like that, we recruit people and we don't know what they're doing. So each and every person in organization are accountable. For example, a salesman have a minimum target of say 4 million or 5 million per month. He's not doing his business, he's not doing his target. So probably he will not be continuing the company. So each and every area has been defined with the revenue targets, particular sales and collections. So we are very strict monitoring on our people performance. Plus we also perform very closely our customer performance, what is happening in the market, what customers are doing, what customer needs. So I think overall, if you look at to the way we execute our business strategies and plan, we supervise on day-to-day basis. For example, I know every day my sales. Every 2 hours I know what sales I am making. Like I know what is my target. Even for example, I try to see what I sold till yesterday in last month. For example, today we are on the 5th May. I know what I sold on 5th April.
So it's some sort of a,
monitoring,
a monitoring and
very
tracking
strong
system.
tracking, customer-wise tracking, distributor-wise tracking, salesman-wise tracking.
Yeah.
And that's what probably bring a lot of focus on executions.
Now, you're talking about, sales tracking and all these. But last year we saw the construction industry, which is a critical market, especially for the paint market. We saw the market, the construction industry contract by about 9%.
Yes.
How has this impacted your business?
Okay, if you look at business growth of construction sectors is declined. There's no doubt about it. From 13% it went to 9%. But see what happened, as a company, as a professionals, we have to look for other avenue also to make at least make the company profitable. So what are the basic things? Then you cut certain costs. So we look for cost reductions. We make sure that we do strategize certain product range in such a way that work on a niche market, niche and a focus market, work on a market we sell little bit less but make more profit, which is a niche market area. So what we've been trying to do in our business in such a way that we can improve gross margin of selling a better product mix.
Now, last year we saw, the interest rate capping law coming to force. And one might sit down and ask, you're not in the business of lending, but we have seen credit, to the private sector. And the private sector is a driver of growth, of economic growth in a country like ours. So how has this impacted you, bearing in mind that a lot of companies now are not in the mood of lending?
Yeah, it's true. The bankers are not interested to lend money to the unorganized sectors. I think the role model of economy of African market so far is like it's been managed by unorganized sectors, and organized sectors which probably there's a lot of risk of lending money to them. But you have to have a calculated risk, and the business you can earn more interest income from those sectors. And I think maybe like Kenya, Uganda, Tanzania, 70–80% market like that. So if money is not easily available to those sectors, it's going to affect the business environment in the countries. And probably it is, yes, I'm talking to many business CEOs and many business sectors, they're all saying that the business is getting affected because of this cap which is input. And I'm sure that government look into that, how to sort it out. Okay, one way, it is a great initiative to control the cost of interest in the country, because we are paying highest interest costs in the world. And sometimes it is also affect our business growth and expansion plan for us,
Sure.
So for organized sectors is a good step. It's a welcome step for us, because we were hiring money at a very high interest, and suppose we want to expand new product range, or we want to go open any new operation in any countries and hire money in Kenya and Uganda, it's very difficult. It's become very expensive. So for us, it's been a very good step. But when the role model of the country, where 60–70% organized sectors, those are seriously affected on this, and it has been bringing business down for many sectors, and overall, then it's going to impact on a top line.
And you know, about 5 years back, the Crown Paint was very ambitious, you know, venturing into regional markets like Ethiopia, South Sudan. But it has gotten to a point whereby last year you decided to put on hold these plans. What informed this decision?
Well, I think there were some misconceptions on reporting. What we said that we would like to focus on main countries like Uganda, Tanzania, Rwanda and Kenya, because these are the market where we have already set up, we have factories there, we have established it, people are there. We are trying to get more market share on those countries. Plus, last 2 years, the market was not very good. Like, for example, Tanzania went through elections, Uganda went through elections. So we thought, let's consolidate this market, improve the market share on these countries. Then probably, because if you want to expand too fast, then sometimes very difficult to manage resources across. It's not for Kenyan companies to manage a fund or cash at 4%, 3% like Europe. So again, we had to hire money at 16–17% here, and then going to Ethiopia and Sudan. So, and looking at those conditions of those countries, like Sudan is still unstable. We have keep on hearing the problems in the, sometimes things are not good. Ethiopia has a serious repercussions on the cash flows, in the sense that the currency is not available. You have to keep a stock of 6 to 9 months of raw material. Economy. So if you look at those overall the dynamics of the paint industries and market and the situation which we are in at the moment, we can't just expand everywhere and just trying to put ourselves in trouble. Because first we have to nurture what we have in our hand, and slowly, so we thought, let's nurture these two markets, because Uganda and Tanzania gone slow compared to our expectations. So we thought, okay, let's get into put our feet down and settle down, and then we look for the next 2 years in those countries.
And when do you expect, you know, the Tanzanian and Ugandan market to start making a good money for you people?
Okay, I think Uganda should start doing well this year.
This year?
Yeah. Tanzania has, we done well in last year in Tanzania also, extremely well. But the way we are expecting, like, I mean, since we are a very aggressive company, we look like when we have a small market base, we think we should grow by 50–60%. So that's not happening. That's happening like 20–25%. So I'm sure that the business environment in Tanzania has to improve. I think more investor has to come in, and maybe we keep on hearing this. The conditions environment is not very fruitful for investor to come in. So I hope things will settle down, and we're trying to get better and better.
Good. Yeah. Finally, as we wrap up this interview, I want to find out from you, you know, you have made deliberate efforts, you know, to phase out lead paint from the market.
Yeah.
When do you expect to do away with lead paint 100% from
lead is we almost 95% is way out already. I think within the next 6 months we are going to be out. So we are the first companies that taken initiative to make the lead free, and we are also a company which launched a green paints, you know, zero VOC paint, which is where the paint will be able to be environmental friendly, okay, and very healthy, in the sense that the most of the time paints have a certain chemicals and additives which can harmful to the people and to the environments. So what we've been trying to work on that, we're the first company where we develop entire our sourcing in a such a way and put a system in a such a way that we can able to offer a green paint to the market and to the customers with the same cost. Worldwide, green paints being costlier by 15–20%, because there are certain chemicals are very expensive to mix it in the paints. Good. But we, with our R&Ds and with our partners worldwide, we have selected 1 or 2 partners worldwide. They have promises that they can give us at a very same price, almost what price they are giving to other products. Good. So on this process of that, we've been trying to manufacture green paints at a reasonable cost, and would like to help this country to be green, and we want to make others' life healthy.
Thank you, Rakesh, for joining us here.
Pleasure, yeah.
Rakesh Rao is the Chief Executive Officer of Crown Paints, joining us here on the Trading Bell to paint the future of this industry and where, of course, the industry is going. You don't need to go anywhere. We are back with more. Stay right here.
Thank you.
There you have the figures of how the market traded in the last 1 week. Faith Mwangi is a research analyst at KBC Capital, joining us here to help us put these figures into perspective. Thank you very much indeed, Faith, for joining us here. I'm looking at top gainers and marshals. Of course, we know they are leaving the market. Can they go higher than these?
For marshals, it's normally speculative trading. So as for it going higher, that still remains a factor of the market, supply and demand. Yeah.
So all things remaining constant, we don't expect it to go up or down?
It will still be speculative. So it's still, the graph will still be up and down continuously for the next few weeks.
And when you look at the all share index, I mean, it's negative 3.48, whereas all the other markets, the other three indexes, they appreciated even though marginally. What would you say contributed to all share index?
For all share index, what we've seen is that the big counters have taken quite a bit of a hit. So the likes of ABL. So when you look at the large caps, only Safaricom that's doing very well. So that has affected the NASI significantly. But for the NSE 20, we've seen the other larger components actually coming in pretty strongly. So the likes of KCB, Cooperative Bank, they're all doing very well over the last 1 week at least.
And when you go to the top losers, you know, I'm interested why Uchumi Supermarket, you know, losing about 16.36% of our value. But when you go to the top movers, you find it there moving almost 1.5 million shares. What explains all this?
For Uchumi, what has been happening on the counter, there has been significant foreign investor selling, and especially over the last 2 days or so. But also over time, there has been a sell-off on the counter, given that the outlook for Uchumi remains very negative, given that we are still yet to see any developments in terms of what they're planning to do going forward. The last communication we had from the company was a few months ago, and so investors are a bit jittery on what the market is where the market is going, given that we've seen Nakumatt struggling, we've seen them going out of stock, and them being the biggest supermarket in terms of the chain-wise. That also translates into negative feedback for Uchumi.
And now going forward, what are the key fundamentals that are likely to shape the market?
For the market going forward, what we'll see is earnings shaping how investors are going to invest. Because remember, for this year, investors are looking at both earnings and also trying to take a position just before the election in August. So that will be what will be shaping the market going forward, at least between the next 2 to 3 months. Yeah.
And about 3 months from now, we expect it to get to the polls. Do you expect the market to bottom out?
Most likely it will, because at that point in time, we'll either have people rebalancing their portfolios or taking in new positions. And also they'll probably, depending on how the temperatures are just before the elections, then we might also see a bit of sell-off at the same time. Yeah.
Faith, I want you to become predictive and tell us which is a stock or counter to watch in the next 1 week.
For the counters to watch for the next 1 week, I think we'll probably be looking at KCB and Cooperative Bank. Again, Cooperative Bank has received a lot of interest, mainly because there's a bonus issue coming up at, in June. And also for KCB, we've seen quite a bit of buying on the counter over the last 1 week. So it would be interesting to see how they develop. Yeah.
Very well. Thank you very much, Faith, for joining us here.
Thank you.
Faith Mwangi is a research analyst at KBC Capital, joining us here on the Trading Bell to help us understand what the figures mean. This is a Trading Bell. You don't need to go anywhere. Stay right here.
The interest earned on the M-Akiba will actually be simple interest and will be paid out by the government through the mobile phones as promised.
Man, oh man, we come to the end of the Trading Bell program for today. Many thanks indeed for your time and company. We encourage you to continue engaging with us. Our SMS line is 22162. Facebook page is the Trading Bell TV show. Twitter handle is at the Trading Bell. My personal Twitter handle is at O'Brien Kimani. We look forward for the same company next week on Thursday, same time right here on the KBC Channel 1. For now, we take you back to Broadcasting House. From me, O'Brien Kimani, and the rest of the Trading Bell crew, we want to take this time to wish you a profitable night ahead of you. Bye for now.